Hey everyone, welcome back. Today, I want to talk about something that's been on my mind a lot lately. The global economy and the storm that's brewing ahead. I've been digging deep into what's happening, and I can tell you right now, things are about to change in a way most people aren't prepared for. There are signs everywhere. The economy, as we know it, is on a fragile foundation, and unless we take action, we will be caught off guard. The mainstream media won't tell you this. Instead, they'll keep you distracted with short-term news cycles, celebrity gossip, and political drama, while the real economic problems grow right under our noses. But here, we focus on the truth, no matter how uncomfortable it might be. So if you're watching this, stick around. This isn't just another doomsday prediction. It's about understanding the bigger picture so we can position ourselves wisely. If you find value in what I'm saying, make sure to like this video and subscribe, because trust me, what I'm about to break down is something you won't hear on mainstream media. To understand where we're going, we need to look at how we got here. We've seen economic crises before, the crash of 2008, the pandemic-induced crisis of 2020. But what's coming next is different. The financial system is built on debt. Governments print money to keep things running, but they never actually solve the core issue. This creates artificial economic growth, where the numbers look good on paper, but real wages don't increase, and the cost of living rises. For decades, the US and other major economies have operated under a model of debt-based expansion. Every time there's a problem, they flood the system with newly printed money. This was the strategy during the 2008 financial crisis, and it was repeated again during the pandemic in 2020. And now, we're reaching a breaking point. Trillions of dollars have been pumped into the system, and now the bill is due. Inflation is at an all-time high, interest rates are rising, and major economies around the world are struggling to keep up. This is not a coincidence, it's a cycle, and we are nearing the part where the system corrects itself, and historically, that correction is painful. Just look at history. The collapse of great economies always follows a pattern. Overspending, excessive debt, inflation, social unrest, and then economic restructuring. The Roman Empire fell due to financial mismanagement. France saw its monarchy collapse after years of economic instability, and the Great Depression wiped out generations of wealth. We are watching history repeat itself. Economic experts are raising the alarm. The US debt has reached an unfathomable level, and key players in the global economy, like China and Saudi Arabia, are backing away from purchasing US Treasury bonds. That's a major red flag because, for decades, America has relied on foreign investors to finance its deficit. And now, those investors are pulling out. That means one thing. A crisis is on the horizon. The Federal Reserve will be forced to make a tough decision. Either raise interest rates to attract investors or let inflation spiral out of control. Either way, the everyday person is going to feel the pain. Let's not forget the impact of trade wars and economic nationalism. Governments around the world are imposing tariffs and tightening regulations, further isolating economies and reducing global trade. What happens when global trade slows down? Supply chains suffer, businesses struggle, and prices skyrocket. And don't even get me started on digital currencies. Central banks are pushing for digital money, and while they claim it will bring financial stability, I see a different agenda. A fully digital financial system means total control over transactions. Governments will know exactly where your money is, how you spend it, and they could even freeze accounts at will. This is not a conspiracy theory. It's already happening in some countries as we speak. Look at what China is doing with its digital yuan. The government can monitor every transaction, control spending, and even limit purchases if they deem it necessary. Imagine that level of control on a global scale. It's not a matter of if, it's a matter of when. Here's where things get even more interesting. Some believe that governments, particularly in the US, aren't actually trying to prevent a financial collapse. Instead, they're preparing to capitalize on it. Think about it. When a crisis hits, assets drop in value. The super rich swoop in, buy everything at a discount, and then wait for the market to recover. We saw this in 2008 and 2020. Billionaires like Warren Buffett, for example, have been selling off stocks lately. Why? Because they know what's coming. They're getting liquid so they can buy back in when prices crash. Meanwhile, everyday people are being told to just keep working hard while their purchasing power disappears. Inflation eats away at savings, and the average person is stuck in an endless cycle of debt. The middle class and working class always take the hardest hit in times like these. Inflation eats away at savings, purchasing power declines, and job security weakens. If you think your 9 to 5 is safe, think again. Automation, artificial intelligence, and corporate downsizing are all accelerating. Companies are cutting costs, and that means fewer jobs for the average worker. If you take anything away from this video, let it be this: do not wait until the crisis is here to act. There are a few key steps you can take right now. Diversify your income. If you rely on just one source of income, you're at risk. Find ways to create multiple income streams: investments, side businesses, freelancing, etc. Hold real assets. The value of cash erodes with inflation. Look at assets that hold their value: gold, silver, real estate, and even cryptocurrencies. Stay informed. The worst thing you can do is be caught off guard. Follow economic trends, understand what's happening, and adjust accordingly. Reduce debt. High-interest debt will cripple you in a financial downturn. The less you owe, the better positioned you'll be when times get tough. Invest wisely. This is not the time for reckless spending. Every dollar you invest should go into something with real long-term value. Prepare for a system shift. The economy is evolving. Learn about decentralized finance, blockchain technology, and how wealth is shifting in the digital age. Many people feel like something big is coming. You might not be able to put your finger on it, but deep down, you sense that the world is on the verge of a significant shift. And you're right. A pattern is emerging, one that we have seen throughout history. Financial crises, power shifts, and wealth transfers always follow a predictable cycle. But here's the thing. Most people only realize what's happening when it's too late. Right now, there is a plan in motion, and if you don't recognize it, you will become a victim of it. Those in power, governments, financial elites, and corporate giants know exactly how to manipulate markets, currency, and even public perception to their advantage. Throughout history, empires have risen and fallen due to economic manipulation, resource control, and the management of public perception. Just as Rome declined due to internal corruption, overspending, and external pressures, modern societies are heading in a similar direction. The difference? Today's tools of control are more sophisticated, including digital surveillance, controlled media, and economic policies designed to favor the elite. And here's something else to consider. We are now living in an era where people are bombarded with distractions. Think about it. Social media, endless entertainment, superficial news. All of this is designed to keep people from paying attention to the deeper issues at play. The more distracted people are, the easier it is for those in power to shift the economy in their favor without resistance. The truth is, we are at a crossroads where individual freedom and centralized control are clashing. Economic freedom, personal independence, and self-reliance are being challenged in ways we have never seen before. Understanding this struggle is key to positioning yourself correctly for what's coming. Let's talk about wealth transfer. Every major financial crisis follows the same pattern. Prices rise artificially. This could be in real estate, stocks, commodities, or even new technologies like artificial intelligence. Public participation increases. Everyday people jump in, thinking they're going to make money. The crash happens. The elite sell at the peak and the average person loses their savings. The rich buy everything back at a discount. The cycle repeats, but with fewer winners each time. This is called pump and dump. And it's a game the wealthy have mastered for generations. We saw it in 2000 with the dot-com bubble, in 2008 with real estate, and again in 2020. Now, another cycle is approaching, and those who don't see it coming will suffer the consequences. If you've noticed that inflation is skyrocketing, that your purchasing power is shrinking, and that debt is at an all-time high, it's because the next major financial event is already being set up. This is not accidental. It is planned. Governments and financial institutions know how to create crises that allow them to consolidate even more power. When fear takes over, people accept drastic measures. Whether it's economic restrictions, increased taxation, or greater governmental oversight of personal finances. And what does this mean for the average person? It means they will be stuck in a cycle where saving money becomes almost impossible. Prices continue rising, salaries remain stagnant, and opportunities for financial growth are limited to those who already have wealth. This is a system designed to keep people trapped. The current bubble is in artificial intelligence, AI. Just like the internet boom of the early 2000s, AI has been inflated beyond its real value. Companies are investing billions, markets are responding with massive stock increases, and people are jumping in, expecting endless profits. But history tells us this won't last. There are already signs that the AI market is overhyped, with certain companies unable to justify their valuations. Once this bubble bursts, it will trigger another wave of financial instability. If you're relying on AI-related investments for the long term, think carefully about your strategy. Many companies will not survive the crash. Guys, I don't say this to scare you. I say it because we are at a turning point. The economic structure as we know it is shifting, and those who are prepared will not only survive, but thrive. Governments will do what benefits them. Big corporations will do what benefits them. But you have to do what benefits you. If you found this video helpful, share it. Get the word out. And if you want deeper insights into how to navigate this storm, make sure you're subscribed. I'll be breaking down more strategies in the coming weeks. Stay safe, stay smart, and take control of your future. See you in the next one.